Charlie Munger purchased Alibaba with leverage and he said that it was a home run investment. So why did he go back on that in his new Daily Journal interview? He said it was a big mistake. Charlie Munger doesn't suggest you use leverage, but if you know 100% that it's a home run, you can use leverage. How much money would you put in if you can guarantee a good result? So what made him think that this is a mistake? Now we're going to go into what's happening in his history of buying Alibaba. What is he seeing in the market when it comes to China and the new rules and maybe the CCP? We're going to talk about everything about his purchase of Alibaba and what he has been saying about Baba. So let's get into it in this video. But before we do, like it and subscribe to my channel. Charlie Munger decided to buy Alibaba around Q1 2021. Charlie Munger bought 165,000 shares of Alibaba at an average price around probably $245. That's where the average was at that time. This was right after Jack Ma came out and said everything he said about the CCP. We all know what happened after that. The CCP kind of rained down on his parade and got him out of here because he was just talking trash, acting like he knew what was going on in the country and he knew better than the CCP. That's when Alibaba stock decided to crash all the way from $300 and it kept going down to $280. 270, then it went down all the way to like 160, and it kept going lower and lower. On top of that, China was getting more strict on cybersecurity, actually stifled Didi's business, so China was just getting hard on different companies like Tencent as well. It stopped the gaming licenses. You have to limit the amount of hours kids can play. Also went over to the education sector and said that sector was pretty much corrupt and shut it down. You had all the stocks just crashing. So you can see the turmoil coming into China at the moment as China was raining down heavy on a lot of tech companies and a lot of companies in general. So during this whole crash of Chinese companies, everyone was worried, but not Munger. Munger said this wasn't an easy investment because he just understood China and he always had confidence in China. He kept picking up shares in Alibaba at this moment.
A little bit of leverage here and in another place because the opportunities were so ridiculously good. I thought it was desirable to do that. So you're right. It's unusual for us, but we did find a few things. Sometimes myself a mental question. I say, what is the appropriate percentage of your net worth you should put it in a stock if you think it's an absolute cinch? Well, if you're the kind of fellow who's right, and when you think something is a cinch, the answer is 100%, or maybe 150%. But nobody teaches people to think that way in finance. But if the opportunity is great enough, the logical answer is 100%, or maybe 200%.
Q3 2021, he picked up around $138,000 worth of shares of Alibaba again, around a price of around $180. So he was still bullish at that time. He even tripled down again. He picked up around $300,000 worth of shares of Alibaba at an average price around $145. So during this whole time, in his mind, he's thinking this is a cinch. Whatever is coming to China right now is going to blow over maybe in 2, 3, 4 or 5 years because that's how he thinks he's a long-term investor. Think about what happened during 2008, the financial crisis, when everyone's running to the hills, everyone's scared to buy. He's picking up the bank stocks. This is when he bottom ticked Wells Fargo and Bank of America. So he did amazing on that investment and he's held it ever since. I guarantee you he was thinking the same way when it came to Alibaba at this moment. Q1 2022 comes around and he sells 50% of his position and everyone is going crazy. Everyone's worried. What is Charlie Munger thinking and why did he do that? We end up finding out that he did it because tax loss harvesting. He wanted to offset all his gains from 2021. Why did Charlie Munger think that Alibaba was such a cinchy, easy home run play in 2021 just after it crashed? If you look at the financials of Alibaba, it was hitting on every metric. Alibaba's revenue was growing at 35% annually. It had 45% gross margins. It had 18% operating margins. Return on equity, return on investment was averaging around 15+%. It was hitting on every single metric. On top of the dominance of Alibaba and the moat that it had in the internet section of China. And you look at the economics, the moat of Alibaba with over 40% dominance in the e-commerce sphere, Over half of the digital payments in China going through Alibaba, on top of the increasing cloud growth, over 30% dominance in that sphere. So you can understand why Charlie Munger loves Alibaba at this point if you're looking at all of these different metrics. So if you're looking at all of these aspects of Alibaba, why would Charlie Munger say this is a mistake? And this is where he goes to competition.
I regard Alibaba as one of the worst mistakes I ever made. In thinking about Alibaba, I got charmed with the idea of their position on the Chinese internet. I didn't stop to realize they're still a goddamn retailer. It's going to be a competitive business, the internet. It's not going to be a cakewalk for everybody.
Competition in retail, as Charlie Munger claims Alibaba is getting tougher and tougher, especially with TikTok coming into that section and going into e-commerce. We got PDD starting to make a profit and started making a huge splash in China. We still got JD.com, a huge player in this retail space, picking up steam. So you can understand how competition can run rampant in China and come very, very quickly. With a lot of competition and the fact that you're in retail, that's going to come with low margins. And with low margins, that means you're not going to get as much profit coming into your company. So the returns that he was projecting for Alibaba are just way off at this point. I think he probably had more than a 10 or 15% return in his mind, and he's seeing that lower into the future. When it comes to the CCP risk for Alibaba, he is actually not worried about that. I'm not sure if you take it in a different way.
Well, that's a very good question, of course, but I would argue that the chances in a big confrontation from China have gone down, not up, because of what happened in the Ukraine. I think that the Chinese leader is a very smart, practical person, and it doesn't. Russia went into the Ukraine because it looked like a cakewalk. I don't think Taiwan looks like such a cakewalk anymore. I think it's off the table in China for a long, long time. And I think that helps the prospects of investors who invest in China. The other thing that helps in terms of the China prospects are that you can buy better, stronger companies at a cheaper valuation in China than you can in the United States. So you're getting the extra risk can be worth running given the extra value you get.
But on the other side, you hear people talking about the Chinese spy balloon and how that's rupturing relationships with China, on top of the US banning a lot of chips and manufacturers. So there's a lot going on with those relationships, and who knows what happens in that aspect. But Charlie Munger is not as worried as a lot of people. It's more about the competition and about future returns. So do you see Alibaba as this bad investment going forward? What are your thoughts on Alibaba and everything that Charlie Munger has said about Alibaba so far, guys? Like this video and subscribe to my channel.